Well, we've had an extraordinary run of economic growth, literally over the last 15 years, with a single interruption of the pandemic and the shutting down the economy. The U.S. real GDP has grown at about 2.1, 2.2% average annual rate since the real estate collapse back in 2009 to 2010. This has been an extraordinary length of time for a business cycle to remain positive. And while there have been many forecasts that business cycle has to end and turn down at some point, the data that keeps coming in does not reflect a slowing economy at all. We continue to see strong real GDP growth, strong job growth, and inflation, while it has not reached the Fed's target of 2%, has declined to nearly 2% inflation. So inflation, jobs, economic growth all continue to be positive, and they've been fed by the continued strength of consumer final demand. Consumers continue to be willing to expand purchases and spending, some quarters switching from buying goods, other quarters the services sector. But overall, they continue to expand their consumption. And as long as jobs are growing and incomes are rising, as they have been, we think the U.S. economy will continue to avoid a recession, certainly through the end of 2025. I think the Toledo market is a fair reflection of the overall U.S. economy. We're certainly industrially based, but we're also transportation based. And those two sectors are going in different paths. The industrial manufacturing sector has slowed dramatically. Output is declining, but the transportation sector continues to expand. So as long as consumer final demand remains strong, we're going to continue to see the transportation sector, warehousing, and shipping continue to be an important contributor to what I think will be continued growth to the Toledo and Northwest Ohio economy in general. I'm actually very optimistic about that. The one sector that continues to flounder a bit in Northwest Ohio, as it is across the country, is the housing sector. And that comes primarily because of a shortage of inventory or homes on the market for sale. And with mortgage rates up as they were over the last couple of years, it made it very difficult for people to buy homes, but more importantly, more difficult to sell a house. It's difficult to give up a 3% mortgage to sell a house and knowing that your new mortgage rate is going to be 6.5% currently. So the housing sector remains a stagnant sector of the economy, and in the face of what is continuing high demand. So that is an issue that is going to have to be dealt with affordable housing construction efforts going forward. So I'm very optimistic about what I think the Toledo economy can do through the end of 2025. Many people think that the election that's coming up in about 2 weeks, at least when we're taping this, will have a major impact on the U.S. economy over the next 1 or 2 years. If we end up with an election where there is a stalemate, that it's a very close election with no clear mandate for either candidate and no change to the divided Congress, then I think the election will have a very little impact on the economic expectations that at least I have through the end of 2025. Clearly, if one of the two candidates wins the presidency with a large plurality and has a mandate, that will affect economic conditions and the outlook going forward. In both cases, whether it's one candidate or the other, both are promising fiscal stimulus, that the government will initiate programs which will result in either lower taxes in one case or increased spending programs in the other case. So additional fiscal stimulus will add to the debt, which is reaching alarming proportions. And I think the issue going forward, politically and economically, will be when do and how do we address the rising level of federal debt. I think the ag sector, in particular ag commodity pricing, is going to probably see some upward pressure going forward. The weather patterns this year have certainly resulted in yields being less than they were at least in 2023, and ultimately that leads to less carryover for next year and reduced inventories in the commodity markets. So that would put upward pressure on prices, which is not what the Federal Reserve wants to see in terms of its effort to combat inflation. But essentially, I think it's a reasonably good year this year in the ag sector in terms of the results, with prices at levels that can generate positive cash flow for those in the ag business. I think we'll see a slowing economy for the fourth quarter of this year and first quarter of next year, with real GDP down below 2% growth, the long-term trend line, before recovering to above trend line growth in the final 3 quarters of 2025. Now, that forecast assumes the Federal Reserve continues to ease monetary policy by cutting interest rates. It assumes that consumer spending continues to expand at a reasonably strong rate. It assumes that we don't find a Mideast war that cuts off oil supplies from the Mideast because shipping can't get through the Red Sea. It assumes that the Ukraine-Russian conflict reaches some type of resolution going forward. And it assumes that there isn't a significant change in taxes or fiscal spending programs from what we've experienced over the last year or so. Those are large assumptions, any one of which could derail the expectations for a continued solid economic growth in 2025.